Hi, everyone. My name is Angelo Zino, and I help lead up the tech team here at CFRA. I wanted to provide some high-level insights from a thematic that we just published that was titled Cloud Backlog Growth Drives AI Enthusiasm, Hope for Sustained Demand. So this is our disclaimer. In our thematic, we try to highlight how we're seeing a fundamental shift in AI sentiment driven by really two critical factors over the last couple of weeks. First, you've got Anthropic's explosive growth. They've scaled from about a $30 billion annual run rate as of early April from a $9 billion run rate in late December. The level they reached just in 3 months took some of the fastest tech giants like an Alphabet and a Meta about 7 to 10 years to reach. And we believe truly shows a successful AI monetization story that the street was craving for. Second, we're witnessing accelerating cloud revenue and backlog growth that really validates the current AI spend in our view. So why does this matter? Well, three reasons. One, it creates a belief in a longer AI revenue tail, which justifies, we think, some of the higher valuation multiples that you've seen. Two, higher demand is triggering even more infrastructure spend, and that's creating this positive feedback loop. So Alphabet already pointed to sharply higher spending for 2027 on its Q1 earnings call. And then third, it has, and we think will drive more meaningful upside to revenue and earnings estimates across the entire AI ecosystem. This visual, we think, tells a very compelling story. So backlog growth among the big three cloud providers, you've got Microsoft, Alphabet, and Amazon, points to an acceleration of growth with the total combined backlog doubling here over the last 6 months. Now, when you compare the growth rates among the big three, Alphabet has been by far the biggest winner, nearly quadrupling bookings here over the last 3 quarters, while Amazon's has more than doubled when including a $100 billion Anthropic order that was received after the quarter ended. Microsoft's 70% increase is also positive, but it is heavily tied to OpenAI and very concentrated there. So that's a story that investors right now appear to be taking a wait and see and being on the sidelines with. Higher backlogs often translates to higher future revenue. So, and this backlog growth is already translating into actual revenue. As you can see here in this visual, cloud revenue growth rates have reaccelerated, with Alphabet having the greatest hockey stick move here, growing 63% just in Q1, and we think will likely double its revenue run rate here over the next 2 years. AWS has accelerated to the high 20s level, and we think will continue to accelerate into the 30s in 2027, while Microsoft's growth rate has leveled off into the high 30s, 40% level, but we do expect them to also slightly accelerate in the second half of this year. We do have buy or strong buy recommendations on all three of these names. The higher capex spend has created the greatest wealth effect transfer, we think, that's ever been seen for the chipmaker space. And we see 4 critical bottlenecks that really have emerged. And bottlenecks often create great pricing power and significantly higher earnings potential within the space. On the memory side, next generation AI servers require a lot more memory content, and that trend will continue here over the next 2 to 3 years, while companies like Micron, SK Hynix, Samsung are signing longer-term supply agreements, something that we haven't seen in the past. We rate Micron, Samsung buys, and SK Hynix a strong buy. Second, on the CPU side, this is a new emerging bottleneck. AI agents are creating a massive structural shift towards greater inferencing workloads, increasing the ratio of CPUs to GPUs. AMD and NVIDIA are strong buys and our favorite plays here, while also Intel and Qualcomm buys as well. Third, on the optics side, this is the transition from copper to optical interconnects to handle higher bandwidth demands. Some of our buy recommendation names include players like Lumentum, Coherent, Marvell, and Broadcom. And then finally, you've got the power management components, which are also starting to see tight supply as demand there on the data center side increases. Analog devices being our top play there. So that's all I have. If anyone is interested in learning more about this thematic or any of our other research, please visit marketscopeadvisor.com. Thank you all.